Well, good morning, everyone. My name is Evgeny XATA, and I'm a CEO of CyberTrust. And today I will actually speak about blockchain, not in terms of how to kill it, but what can it give to society in large. And after me, there are a lot of very interesting speakers speaking about, how things got carried away and what to do about it. But my presentation will be about macro. And it's called Crypto and Monetary Reset. And basically, there are a lot of people trying to figure out what crypto is and how to define it. And instead of giving you like a lecture on that, I thought I will give you a little history. And then maybe from the historical perspective, people can extrapolate themselves what crypto would look like and what it is and how to define it. Is it security? Is it derivative? What it is? So I will start. I'll start with wealth, because at the end of the day, you can try to litigate and try to kill the innocent industry, in the very beginnings. But at the end of the day, it's all about wealth creation. And if you look at the wealth creation historically, starting from ancient times, there are economists that actually mapped it out. The guys like Giri and Hamis, they did a GK dollar, and they mapped out the worldwide incomes from the day of Jesus' time, right? So it's very easy to understand how much wealth grew. And if you start looking at that perspective, you realize that till 1770, there were pretty much no wealth growth. I mean, it's shocking, right? But okay, is it working? But so I mean, you guys know that capitalism is actually a very recent phenomenon. Before, we were living in feudalism, and basically people lived on $300 a year. That's how much it took to actually feed a slave. $300 a year in 1990 prices, and all the rest were taken by the lords, right? By the regulators of the countries. And Roman Empire and Greece were the richest countries in the world. Their standards of living, they were at $800. Not much different, actually. France, Spain, Belgium, about 600. Iraq, Egypt, and Turkey, about 700, because they had fertile land, right? And it was extreme wealth concentration. It was awful living standards. And when you guys go to see the palaces, right, it's really those regulators that build them, right, that they got all the wealth. So the only way, if you like, and I worked at Boston Consulting Group and investment banking, and we do CAGRs, which is a cumulative annual growth rate. So if you do like a CAGR of growth of wealth, it was 0.01%. So it took you 100 years to just get 1% growth. And clearly, the only way to do wealth creation was military. It was, go and kill your neighbor and take his money. That was the way to create wealth. And it actually lasted till 1770. Right? That was the way to create wealth. It was to go and kill your neighbor. And all of that changed with technological revolution, right? In Britain. And Britain became the most wealthiest country in the world because of that. Before that, it was Holland. And it was because of maritime technology and navigation technology that they developed. But Britain took over, and the first revolution was, and here's is just kind of a little list for you guys. The first revolution was textile. And it lasted exactly 50 years. And the way to map it is really not by technology, but by adoption curves, right? It's when the adoption starts. And it started in Britain, and 50% was about technology, and 50% was about organizational technology. Every time, the regulator had no clue how to manage it. It's interesting. Like they every time they're like, oh, what's going on? And every time, the level of understanding of society, of the consciousness level actually went up. Like the people 50 years, like those 50-year cycles, they were incredible. They were like tsunami. They came and basically destroyed everything that was before and created other things. And in the process, the leading country emerged from that became the leading economic power and the leading military power. And every time it was the same. So let's start with the first ones. And if you see, there was not much wealth creation in the first two waves. The first two waves was textile and railroads. And the last, the like world GDP at that time. So in 1770s, the world GDP was $500 billion. And just in the period of 50 years, UK created 190 billion. It was 40% of what was the world created of previous years. So it was incredible value creation in just one country. And then, so textile revolution was about, 3 innovations in textile and metallurgy, and that drove incredible wealth creation. And then the second technology was railroads. And Britain was, again, #1 country in that space. And interesting is that at that time, the ICOs or IPOs of those days, they were called parliamentary acts. To build a railroad, you actually had to go to British Parliament, and the Parliament had to vote for your project. And then you had the right to construct a railroad. And in 1840, at the peak of, and usually like in every cycle, it starts with a mania, a speculative mania, right, that drives the capital accumulation in the sector. And in 1840, at the peak of the mania, of railroad mania, Parliament of the United Kingdom passed like 250 acts a year. And 95% were scams, right? They were intentional scams because they were never created. In fact, if you would analyze them, they went through swamps. They went up the hill where the railroad of that day could not even take the locomotive up. So they were intentional scams. And the way the regulator looked at that, they said, okay, well, if you're so stupid to invest, then you're going to lose the money. And because of this Adam Smith deregulation, basically, UK were able to mobilize a huge amount of capital and allocate it and build a lot of overcapacity. They created a lot of overcapacity. They created a lot of inefficiency, but at the same time, they became the most advanced technological country in the world. And what happens usually in every cycle is that first 20 years, you have the speculative mania, you have this overcapacity, the inefficiencies. The regulator has no clue how to do it. They tend to not get it right pretty much every time. And the leading country usually deregulates. That's what they do. They kind of let it go, right? They let the market work. And the countries that don't get it right, they say the following. They say, the new technology going to displace 300,000 guys that carry ships out the river. And railroads are really awful because of that. And those 300,000 people, they have families, and what we're going to do about them, let's not construct railroads. And then they do like mathematical assumption, like they say, okay, well, we can those alternative routes of transportation, and on the cost base, it's not good. But they usually disregard the concept of time, and time is actually like a very important concept. It's becoming very important, but purely on economic sense, it doesn't make sense. It doesn't make sense to construct a railroad. But it actually turned out to have such a significant spillover effect. And every time, the technology is it's like something awful. Like, for example, when railroad was scaring cows. There are literally like law cases where people said, no, you shouldn't construct railroads because my cows get scared. And but electricity was even worse, right? That was like a devil, right? Like, come on, electricity. So electricity came up, and in fact, the United States became the great power because of electricity revolution. It overtook Britain during that cycle. And then oil revolution came along, and that was because. And by the way, a little step back. Every time it was not about technology; it was about organizational technology. So the first time textile revolution came together, people were brought together in the rooms, and they were made to work 8 hours a day, and they would put a manager over them, and it was a huge efficiency improvement. Because before they were all working in different places. And railroad was the first time when people had to manage the company that you couldn't see people, right? You had to coordinate like a traffic from, from Boston to New York, but you couldn't see people. And it was a huge dilemma at that time how to do it. Electricity revolution was about, trusts and about companies owning companies. And oil revolution was about, specialization. They had HR and legal departments and marketing departments. But the final revolution that is ending in 2020, and if you assume the 50-year cycles, was the microchip revolution, right? And you guys are pretty familiar with that. And it was all about decentralization. It was about like let's outsource decision making at the level of on the ground, and people on the ground know better. So what is a blockchain? And is the blockchain even a revolution, right? Because you hear like blockchain revolution, and I think it is. And the reason I think it is because you really need 0.5% a year of annual growth rate of efficiency in order to be classified as a revolution. And blockchain, together with IoT and Internet of Things, can easily get 1.5% by just disintermediating a lot of waste that exists in the value chains. So it can easily drive the next 50 years of the development. And if you extrapolate the last kind of 4 revolutions created 5x more wealth than all the world combined previous times, right? So it's really like it's growing exponentially. And if you think through that, it means that by the end of a cycle, it's going to be about $200 trillion worth of new products and services, and mostly there will be digital products and services that are not here today. It's just incredible how much value that can generate. So coming back to regulation, it's every time, and it's just a historical perspective, right? In order to really, the role of regulator is really to get the standards of living up, right? That's really the role of a government. And clearly there are a lot of excesses that are happening in ICO space right now, and that should be fixed. But at the end of the day, it's about implementation and getting the standards of living up. And the only way, and we are in the end of a cycle, and this is a scary part. Usually, the way each cycle works is that it has the phases. It's like it's early adoption phase, then the speculative mania, then the very rapid growth, and then kind of maturity, and then the last 10, 20 years it's when the excesses are getting paid back. And usually there are a lot of excesses, right? There's overcapacity or inefficiency, and all of it get back to the taxpayers. Taxpayers get the bill. It's been like that throughout the history, but usually that's not enough. And that's when the wars broke out. And in fact, if you look through the history of those technological cycles, long-term cycles, all the financial crises and all the wars in the world, they were really in the middle of those cycles. They were in the middle of the ending cycle of technology and the beginning of a new one, where the new one was still early days and couldn't really give as much efficiency. So let's look at the last one. So 1970, you all guys know that was an OPEC embargo, and that was actually the end of oil cycle. And in 1973, gold standard was abolished, right? The Bretton Woods was no longer working. And basically, everybody got together and they said, okay, well, how can we promote growth? How can we grow the world? And every time they tried to create a new monetary rules. And it's always the case. They say, listen, things are not working out for some reason. Let's create new rules to promote world trade. And before that, it was 1920, and of course this was 1920 financial crisis, depression, both world wars, and all the regulation that you guys are referring to of 33, etc. That was all because of that. It was all because of excesses of electricity cycle and beginning of a new cycle which was not there. And at that time it was Bretton Woods, right? They said, okay, well, what's going to fix the world? How can we promote stability and world trade? And they created Bretton Woods. And before that, it was Germany and UK, because they were the leading powers of the world, and they got together and they said, okay, well, let's promote the gold standard and create some kind of stability. And what I believe that we are coming to an end of a cycle, and clearly, next year is going to be a year of lawyers, going after the crypto anarchists. But in the end of the day, it's really the only kind of technology there that can really drive the development. It's one of the technologies out there that can really drive the development of the planet. And, it is very interesting technology in the sense that it will, because, everybody understands that financial system is in a very bad shape, right? The banking sector, it's pretty awful, right? So the fiat system that was established in 1970 is no longer working. And it's no longer working because microchip is coming to the end. There's not much efficiency you can extract from that. It's a very structural problem. So, what can the new monetary reset look like? Well, it's going to be crypto. Countries will adopt cryptocurrencies as a national currency, and I'm not talking about Bitcoin or Ethereum. I'm talking about like national cryptocurrencies, right? Like a bit dollar. Because all of a sudden you have a technology that can, so I'm an economist, right? So there's the money. There are two functions of money, container of exchange and a store of wealth or preservation of capital. And all of a sudden you have a technology that can actually take those two functions and separate them out, and that actually solves so many economical problems because majority of problems is we have people like I know there's a cartoon with Scrooge McDuck when he was swimming in money, right? Well, if the money is container of exchange and somebody's storing it, and not putting it back in the economy because of preservation of capital idea, it's very inefficient, right? So as soon as you can separate those two things out and you can create, let's say bit dollar for container of exchange, then all of a sudden you think about it and you say, okay, well, if it's a container of exchange and you're not using it, let's tax it. Let's put demurrage on it, right? Let's say negative 6%, and all of a sudden you don't need taxation anymore, right? You don't need tax system anymore. As long as you create, let's say gold dollar, that is a preservation of capital dollar, and it's clearly not affected by demurrage. And then if you want to move, from container of exchange to the preservation of capital, you pay one-time tax. So there are a lot of really cool ideas out there that can really, really stimulate the global economy that are coming out of this technology. So, some people said the rise of cryptocurrencies will be the largest wealth transfer in the modern history. And I kind of agree to that, because right now, there's not much efficiency in Bitcoin, right? There's not much efficiency in Ethereum, although it's very promising. And technology is developing very quickly, so there will be efficiency, and I hope there will be efficiency. But right now, it's really the wealth transfer from one, from one people to other people. So where are we in this revolution, if you think that's the revolution? Well, internet in 1995 was about 7 million people in the world that used internet. And right now, that's about the same amount of people that use cryptocurrencies. There are about 7 million people out there that actually use cryptocurrencies. And it took internet about 10 years to get to 1 billion. And I'm sure they will be much quicker with the cryptocurrencies, because, I mean, in the end of the day, it will be regulated. But it's going to be incredibly hard to actually enforce this regulation, right? It's like an ultimate liberal dream, right? Of some people that adhere to that philosophy. So what is the blockchain and what is the Bitcoin and all of that? And so some people say it's a currency, some people say it's commodity. And clearly, if it's a currency, it's actually if it's commodity, it's almost like if it's a currency, it's like almost like subsidizing it, because if it's a currency, there's no tax and there's no VAT. And if you classify it as a commodity, then you have to pay VAT and tax. So that's kind of an argument between the two, but it's not really either or, right? And we've been, CyberTrust has been active in the cryptocurrency space for quite a while, and we get asked a lot by, we work with institutional investors, and they come to us and say, well, explain us, what is Bitcoin and what is blockchain? And the way we kind of defined it for us, and I think that could be maybe useful for you guys, is it's a licensing unit. That's what it is. It's a licensing unit to use decentralized application, and that's what it is, because it's a piece of software. And the only way to use that software is to have a license, and the token is a licensing unit. That's what it is, and then people say, well, what is a Bitcoin? And the explanation we have, and I think that works quite well, besides the fact that it's a payment system, well, it's above sovereign notary system, right? That's what it is. It's a notary system which is above sovereign. And nobody can tweak it out, right? I mean, nobody can change that. Is that valuable? Well, I mean, many people would say that, right? Because if you look at the history of government, in 16th centuries, they would pitch gold from every coin, and now we are in this crazy printing press days. So some people would say, there's a value there, right? There's a value in above sovereign notary system that is not relying on the regulator and is not relying on the government, but is relying on mathematics. And all those crypto assets, I mean, all they are, and there are many, right? There are many coming out, and some will die because of my next speakers. But clearly there are good and bad ones, right? But and maybe the next speakers they are doing good things because they are trying to separate the good from the bad. So technology, I mean, it's incredibly how quickly it matures. I get to talk a lot about the fact that, okay, well, technology is not here, technology is not here. It's not here, guys, right? I mean, the bottom line is a lot of corporations, they spend a lot of money. There are huge amounts of people working at R&D centers. And the overall consensus, technology is not here yet, right? That's it. But at the same time, it's so quickly developing. 2 years ago, we had an office in Thailand for IT guys, and we couldn't even download Ethereum. It took us 3 days to download Ethereum. And today, it's white and black. It's incredible how fast things develop. And you have to look at that. So okay, why is there such a speculative mania? So $100 of investment in Bitcoin in 2009 would have been $392 million today, right? That's just a fact. You know, it's and that's you know, it's greed, right? There's a lot of greed out there. You know, there's stratospheric growth. You know, it's still early days because the combined wealth of the all crypto assets, I think yesterday reached $200 billion. I used to work at Silicon Valley in '99, and anybody remembers, you know, what was the Nasdaq at that time? Nobody? No. In terms of value, market cap value, billions, trillions. Okay, it was 5.3 trillion. That was the peak of '99 Nasdaq bubble, right? And none of those companies made money. Well, I mean, 98% didn't make money. So, and right now we're at 200 billion. And people say, well, we're in the bubble. I mean, come on. We're nowhere near the bubble, right? Clearly it's a bubble maybe at the level of companies or at level, because there's just not many Bitcoins or Ethereums out there, and there's only one Bitcoin, there's only one Ethereum. So the money that comes in the sector, that goes there. And maybe there's, you know, it's getting carried away. But relative-wise, we're still early days, and all investors understand that. Another idea is this better than gold, right? Some economists and venture capitalists, they kind of, you know, compare Bitcoin to digital gold. And then if you do that, then it's a very simple comparisons. You have like $8.3 trillion worth of gold assets worldwide, and then it's like $100 billion of Bitcoin. And they say, oh, wow, there's a huge arbitrage there, right? There's also market migration. I mean, system is incredibly rotten, right? And there's $70 trillion is currently invested in the world stock markets. And even though there's regulation and there's over-regulation, you know, there's not much transparency. So, you know, we will see that, you know, in the next leg down, was that regulation really useful? So people assume that once stock market investors understand cryptocurrency, there will be enormous amount of capital migration that would occur. And maybe that's not this year or, you know, or next year, because next year will be the year of litigation, but, you know, it will occur. And finally, asset protection, right? I mean, in the end of the day, what's interesting, and I'm not so, cryptocurrencies cannot be seized. I mean, that's just a fact, right? They cannot be seized because it's above sovereign. You know, it's above sovereign, and you know, it's outside of the judicial and government control. So let's talk that. You know, it's a very important concept. Judicial system has two functions: enforcement and recovery. And blockchain transactions are final; they're one way. And that means that there's no enforcement, there's no recovery, right? If a judge says something, let's say, you know, I want to reverse this blockchain transaction, not going to be possible, right? So it's completely above the level of judicial system. And there's a lot of unicorns that are being created, you know, let's not go over that. But what's interesting is that there are more coming, right? So people thought about, you know, Bitcoin and Ethereum. And now there's like, you know, other things that are coming out, which are over $1 billion in a period of a year. And of course, that's creating a lot of greed and a lot of movement. So yeah, and it's not about US dollar anymore, right? I mean, US dollar is only 25% of the liquidity. A lot of liquidity is coming out of China and Korea. But there's still a lot of risks. And this is very important to go over, right? And that's what we do, CyberTrust. So if you look so our investors are institutional investors. And if the bank, let's say, buys $10 million worth of Bitcoin, the accountant goes crazy. They say, well, what is an asset? And there's no asset. I mean, there's no asset. You know, the answer is like, oh, let me tell you how it works. It doesn't fly because it's either a write-off or it's a theft because the money went out, the auditor comes in, there's no asset, right? So the title ownership and auditability does not exist. It doesn't exist, and it's a big problem. Another problem is clearing. You know, they get used to working with Euroclear or Clearstream, and counterparty risks of buying and selling crypto are just phenomenally high, right? I mean, Bitfinex and Bittrex and all those guys, they don't have any IFRS statements. You know, the ownership is transparent, so there's huge amount of risk in clearing. The fourth risk is how do you store it? Right? People store it on their phones. And that's also a big problem because right now there's so much hacking going on. You know, so institutional investors say, well, I'm going to buy it. I believe in Bitcoin. I want to diversify, but how I'm going to store it? And then finally, the regulator. And then the regulator, they talk a lot about it, but in the end of the day, it's coming back to the way can they enforce through the regulation, and can they enforce through judicial system? And as long as crypto is in this offshore space, they cannot do both, right? So what we do is we basically so what we do is we create crypto derivatives. And it sounds awful, right? But it actually solves a lot of problems, because all of a sudden, if you can bring the crypto asset from this offshore space and put it into Luxembourg jurisdiction, and we're Luxembourg based, and then put it in a Swiss bunker, right, completely off the internet, and then you issue a direct claim, which is a derivative. It's a derivative instrument, but it's a direct claim via securitization law of 2004. Then all of a sudden you have a derivative instrument that can be regulated, right? The judge can freeze it. If something goes wrong and the judge says freeze this asset, we will clearly freeze it. And then the derivative is frozen, but then underlying is a direct claim of that derivative. So all of a sudden, it gives you judicial recovery and enforcement. There's a tax compliance, because the Luxembourg has a very, very, very good pass-through taxation structure. Risk-free clearing is done as well, because all of a sudden you can go through the the proper instruments of existing markets, because clearly the institutional investors, they don't want to take any risk of clearing. And then cybersecurity is also done, because all of a sudden you use state-of-the-art technologies. You use Swiss bunker, which means that the atomic bomb can be blown up and nothing happens to your assets. So and there's a lot of value there. Interesting, there's a company called Grayscale in the United States that kind of does similar thing, and each Bitcoin within the structure worth almost twice as much. So there's so much value, like it's phenomenal. The arbitrage between the Bitcoin price and almost like securitized Bitcoin price is almost 2x. And that's what we did. We said, well, why do you need to do well, let's tokenize Grayscale. Let make anyone buy those assets. And then of course we run into a lot of regulation, right? Then we we're trying to sort through that. But the idea is very simple. We are in this distributed environment. So it means that you really need to mobilize a lot of people to actually create ecosystem and markets. And we said, okay, well, let's create a token, and this token will be a utility token that gives you a right to access and securitize one Bitcoin equivalent. And all of a sudden, and then, okay, what can you do with those crypto derivatives? Well, you can do 3 things. You can actually buy and hold them in your private bank, which doesn't exist right now. You can sell them for arbitrage, because there's arbitrage profit. But the most interesting case, and I think that's going to be 2019 case after the litigators are done, is the case of the new financial products. Because all of a sudden, as soon as you have those crypto securities, all of a sudden you can create treasury bills in Bitcoin terms, or you can create 3x ETF, which will be fully compliant, because the underlying asset within those instruments is something that the regulator can enforce, judicially and regulatory-wise. There's tax clarity. There's no risk-free. It's clearing is properly done. So it doesn't. I mean, it looks just the same as the things they prove every day. So we think that as soon as that's done, there's going to be proliferation of new crypto. It will be like a proliferation of crypto as an asset class. Let's call it that. So if you guys have any questions, let me know. You can also use Telegram to reach me. Telegram is very easy. CyberTrust. Thank you.
Are there any questions at all? We have time for one question.
Only one question, then we have to move.
Sure. One question.
And
Anyone have
also, you're going to
questions?
be in a panel later, so you can be discussing the panel.
Yeah. Sure. Yes.
Well, as an economist, you mentioned bubbles, excesses. As an economist, how would you put a fundamental value on Bitcoin 1.0?
Ooh. Yeah. Okay, so that's a very there's no simple answer to that, right? So let me give you a philosophical answer to, there's simple answer and there's a proper answer. So the simple answer is okay, well, it's a notary system which is above sovereign and it's worth 10x less than Facebook, right? And so that's kind of a simple answer. But the more complicated answer is this: as economists, you know that as economists we tend to think of inputs, and then so inputs is whoever's not economist, inputs like capital, labor, resources, right? Land. Those are inputs. And then the economy is like a black box. and then it does something with those inputs, and then products and services come out, right, which can be measured in dollars or whatever, and and then the consumption of those products or services per capita is what kind of defines the level of prosperity. So so what's interesting is that till the microchip cycle, right, there were only four factors, right? It was land, it was capital, it was labor, and resources, and and they were all deficit type of resources. And when microchip was created, the fifth resource came up, and that's information. And information is abundant; it's not deficit, right? And that's why all the Keynesian things stopped working. They stopped working in 1970, and people say, "Wow, why they stopped working?" Well, because there's new resource, and whole economics is about how to make those resources more efficient, right? And they kind of aggregate things, let's say efficiency at the level of economy, but it's not about you should actually desegregate and say about efficiency of capital, efficiency of labor, efficiency of land, and now it's about efficiency of information. And nobody's talking about that, but that's what it is all about, right? It's about efficiency of information. It's about how to get people together working effectively and create efficiency of information. And the crypto actually, the Bitcoin in some ways, right? It allows you to do that. It's still early days, and it's still, you rightly said 1.0 for that reason. But I really hope that it will go and develop into more efficiency of information and how to get people working together collaboratively, to actually improve that. But if it doesn't, then of course it's going to be just a redistribution from one pocket to another one. I hope it's not going to go that way.